everybody. Welcome. I'm excited to have you here tonight for the Move Up Blueprint, how to sell your home and buy the next one safely. We're gonna get going here. I'm letting a few other people jump in, but just a couple housekeeping rules. I'm gonna leave 10 minutes at the end for questions. So I think it's best that we just leave everything to that point so we can go through them then. Um, if you want to raise your hand, if you have an idea, you just want to maybe leave me a note that, hey, this is something I want to talk about later. That's fantastic. But let's just keep going. Let's go through this. There's a lot of information and I want to get through it quickly. Um, but also make sure that you're getting it. So when we ask questions at the end, that's a great way to go through it. Um, so welcome. I'm Pete Jones. We're going to cover a lot of things in about 60 minutes today. We're going to go through it pretty intently. And if, bear with me, I have my reading glasses so I can see what I'm talking about. But we're going to go through the perspective. Are you ready? Can you sell strategically? Can you buy competitively? And can you coordinate seamlessly? And ideally, we're going to work through that so it's clear and precise, and you guys have a good understanding of what to expect in this process. And at the end of it, if you want to talk further, I'm more than willing and able and wanting to continue the conversation. So let's get into it, all right? So, why listen to me? I'm a realtor. I've been in the business now going on my 14th month. So, I'm brand new into the space from that perspective. But I spent the last 20 years in the corporate world, well, 18 years in the corporate world, and 2 years in the agent marketing agency world, leading marketing teams. And so, I have a good understanding of the marketing piece of it all and what goes into project management and being strategic and moving intently. And I've focused my efforts on this space of helping my clients buy a home, find a home, first of all, buy a home, sell their current home, and move in within a window that makes sense to them and is as painless as possible. So I've done that. I've been involved, as it says here, I'm a dad of three, 13, 11, and 9. They all go to Johnston schools, and I'm deeply involved in the community. Um, just to give you perspective here, as it does say, annual transactions in the Des Moines market, it's about 6,600 move-up sales, which is 73% of all numbers. Homeowners have gained, if you think about it, 5 years ago, a lot of homeowners, maybe like yourself, got into a home with a 2.5, 3% interest rate. And so in the last 5 years, there's a significant amount of equity involved in that home. And so the number here, 122,000 is the average number. And then there is the challenge, as you probably are well aware, 82% have mortgage rates below 5%. That's actually changing. I've seen as other data that said as recently as a month ago, 21% have mortgages above 6%. So the numbers are growing. There are more people with 6% mortgages than 3% mortgages now. So the thought of everybody has a 3% mortgage is still somewhat true, but it's changing as far away as we get from 2020 that we can get. And so the opportunity is there with the right strategy. You can leverage your equity successfully and you can put it to work. And we're going to get into that here. So the question, I'd love for you guys to go through this five-factor readiness test. Are you ready to move up? You're not just wanting to move up, but do you legitimately need more space? Do your kids or your family or whatever your circumstance may be, do you need more space? Have you outgrown your current living environment? Do you have the equity built up? Have you had a mortgage for 5+ years and built on the equity? And is that there available for you to use? Are you looking specifically for the best schools in the metro? I list Johnston, Ankeny, and Urbandale here in several examples just as a reference, but there are obviously great schools throughout the Des Moines metro. So is that important to you? And then from a timeline perspective, can you move during summer or do you have a natural transition point? We say summer because obviously if you have kids, they're out of school, that's a good time to move and put that into work. Um, of course, you have to commit to that before school's out because you have to get your house ready. We have to be ready to go. So there's a time frame from that perspective. And then is your next home going to be your forever home? Are you looking at it as a 10 to 15-year investment? And so I think if you're able to say yes to those, you're ready, and it makes sense to continue the conversation and figure out what that strategy is for you. If you didn't check all these boxes and you can't say that three of them are, in fact, something that you're interested in or that meets your needs, it may not be time to move up, but I think it makes sense to continue to stay on board. And let's see what that looks like because it could, it's not going to change a perspective, but it could change things and gain more clarity for sure. And it does say here at the bottom, if you don't know your equity position, let's talk afterwards. I can get you in front of a lender, or I do have a free home evaluation option that's online, which is high level, has a lot of assumptions. The best route to go, though, is to get in front of a lender and figure out, ideally, your lender, your bank, to figure out how much equity is left on your mortgage. Excuse me, bear with me. All right. So again, Johnston, Ankeny, and Urbandale are the three areas that I picked for this. By all means, there are other great areas in town, Waukee, Grimes, all the above, Des Moines. But just to give perspective, I picked Johnston because I live in Johnston. My kids go to school here, as mentioned earlier. So by all means, that's why that's on there. I went to Urbandale. My wife went to Ankeny. So there's a little bit of perspective as to why they're in here. But at the same point, as mentioned, there are other great schools and areas in town other than these three. But this is just for simplicity. Um, but their schools are top rated, right? They do have, if you look at Johnson, the median price is 425 to 650. It's established community, does have strong home values. I'm reading the slides, which you can read as well, but just to give you perspective, school quality and community involvement are important things here. That's part of the reason why my wife and I decided to move to Johnston. Ankeny, it's blowing up, as everybody knows. Maybe not as quickly as Waukee, but it's getting much larger every day. And so that's certainly a thing. But 375 to 600 is the median. There are two schools versus the Johnston or Urbandale, so that's a little different. A lot of newer developments and more new construction. Johnston's more landlocked. Ankeny is not. It's going north and east, and it's going fast, and actually some west even. Um, but it's best for families wanting newer construction or modern amenities. Urbandale, median 350 to 550. There are still solid schools in Urbandale. Majority of Western Urbandale, sort of west of the interstate, all of those most of those people who live in those areas are going to Waukee schools, but they live in Urbandale, just for reference. So Urbandale, when we talk schools, is majority of the 8035 East, which is traditionally what Urbandale was when I was in school way back when. But it's a good affordable entry point, and it is good for families seeking value in mature neighborhoods. Little line here at the bottom, 35% of movers cite better neighborhood as their number one reason. So why I put perspective on there. And then for families, better neighborhoods mean better schools. Traditionally, generally speaking, that's why these three suburbs dominate move-up activity, as well as what I mentioned previously for reference. So the market has changed. 2026 has been an interesting market already, and it's only, what, 45 days in, the 17th of February. Um, so for perspective, well-positioned, properly priced homes still sell fast and top dollar, but you do need a plan. Um, if you overprice your home in today's market, it will sit. It will sit for some time. But if it's priced accordingly, and we'll go into more detail here, typically pricing, it says 1 to 3% below market value. Um, that home will likely sell pretty quickly because there is higher demand. We've had buyer activity in February of 2026 is 15% higher than it was this time last year, which is interesting. We ended the year in 2025, just to give you a little backdrop, with record inventory, 12-year highs. Over 4,500 homes are on the market in November of 2025, just for perspective. And so a lot of those homes are still on the market. New listing activity has been low this year, meaning there's a lot of buyers out there, a lot of good buyer activity, but new listings haven't come on the market. And usually that's because of the weather. It's been tremendously warm here, as we know, and so ideally, I think we're going to start to see, and we're starting to see already more new listings come on the market that we're probably going to wait till spring, but because it's been in the 60s and buyer activity is so high, and people are jumping in. So the three pillars of strategic selling: preparation, pricing, and marketing. Preparation being figuring out all the things you need, right, from a buyer perspective. And we'll cover this in more detail, but ideally, what neighborhood you want to be in, what type of home you want to be in, what your bucket list of 5 to 6 things are. Pricing, as I mentioned before, 1 to 3% below market value to create urgency and competition. We'll figure what that is when we start doing analysis in your home, assuming I'm working with you. Whoever you're working with, your realtor will put that together from a pricing perspective. And then marketing. There's a ton that goes into the marketing, and that's one of the things that I enjoy coming from a marketing career previously, which I don't know if I said. I know I said corporation and agency, but I've been in marketing for the last 20 years. And so multi-channel sprints, going out as hard as we can for the first 7 to 14 days, because that is when you'll get the most eyeballs on your listing, trying to get offers, multiple offers ideally. And if we're priced right, that should happen in today's market. So, home prep and pricing strategy. There are two critical factors, as it says here, for maximum sale price. So, home prep, 80/20 rule. You have to deep clean. It has to be clean. You don't want people walking into a dirty house. If you were think of yourself out touring homes. If it was dirty, you're not probably going to think too highly of the home. So, declutter and depersonalize. As hard as it is, it's been your home and it's been your family's home, or if you have kids and whatever circumstance being, but it's been home. So you have pictures of your family and yourself and loved ones. You need to take those down. You need to start putting it into perspective that if a buyer walks in, they can see themselves in your home, not see you in their home. So take as many of those things down, take as many things off the walls as you can. If you can move furniture to another location that makes it look more open, we'll by all means go through this. If I'm working with you, or if your realtor is working with you, they'll go through this as well. Um, Natural paint is the way to go these days. If it's dark in a room, I would suggest painting it white or gray. Um, if it's an off color that you really love, sometimes the buyer won't. You don't want to narrow the buyer pool, so you certainly want to do that. And it's hard in February to say curb appeal because you're not thinking flowers and lawns and all those things. But if whatever you can do now to make it look more clean, more prepared, will be fantastic. And then obviously fix the issues. Rule of thumb is, it says down there, the bottom third rule of thumb, anything over $5,000 or more than 2 weeks is a project you don't want to undertake right now. It's not worth it. You're not going to get the value back. So when people ask me, do I do a kitchen? No. Do I do a bathroom? No. But are there little things that you maybe want to do to make it look a little bit better before pictures and showing? Absolutely. If it's under 5,000 and less than 2 weeks, that's just sort of the rule of thumb. Um, Buyers, as it says, your buyers pay for move-in ready, not your taste. So clean, neutral, functional is very, very important. Three pricing mistakes, as I mentioned before, overpricing. Thinking you can always come down is the wrong approach. Logically, yes, you can always come down. However, the market doesn't see it that way. If you're up there and you're 7 to 14 days after your listing and you're not getting the activity you want and you come down, the market starts to think, huh, I wonder what's wrong with that house. And you won't get as many showings. And the statistics show that you'll end up paying a lot less or getting a lot less for your home than you would if you had just price it strategically. The flip side, you don't want to underprice it either. So having a good, solid understanding of what the market is for that home is important. And then emotional pricing, if you're based on what you need versus the reality. If you think it's 750, but the market says it's probably 675, you have to go with what the market says because the market will dictate the price. No matter how much a realtor tells you what the dollar amount is, if the people are paying 675 for homes like yours right now, that's what you need to price it at. So it's very important. As it says here, the winning formula, you analyze the recent comps, adjust for conditions, price below, and then you want to get multiple showings, 2 to 3 offers at above sale price. So if you're under, you drive eyeballs, you drive showings. Ideally, you drive offers, and those offers will eventually raise that price up. So as the example shows, if it's worth 340, price it at 335. Ideally, you'll sell it for 345 in 10 days. Not always going to happen, but that's a good, strong example there. So, what does listing to under contract look like in 14 days? It can happen. Um, there are circumstances that make it take longer, and that's individual choice. I had a client who they were looking for sort of a unicorn home, and it took them 6 months to find the home they wanted. But while they were looking, we got everything ready to go. They were getting their house decluttered, they were cleaning their house, we had all the contracts signed so that when they found that home, we could launch the sales side as soon as we could and get things going. And I'll go into more detail about that later. But um, Ideally, if we're listing a home right away that first week, as I mentioned, 7 to 14 days is the biggest window of time where you can get as many people on your house as possible. So that week one is to launch and maximize exposure. You want to finalize prep. We'll do photography. We'll do drone shots. We'll do 3D tours. We'll do all the things necessary to make your house look amazing so that you get as many eyeballs as possible. In this example, Thursdays are good launch days because it's right before the weekend. And it gives you an opportunity to say, as a listing agent, we're launching Thursday, but you can't get in until the open house on Sunday. That's one strategy. Limit people coming in until you want them, and then they all come through together and they see everybody else in the house at the same time. Maybe they drive up competition, maybe they don't. Another strategy is let's go live and let's get as many people in as we can. Maybe we won't need to have the open house on Sunday. Obviously, there's different perspectives on that. Friday to Sunday, as I mentioned here, the possibility of showing blitz. Week two, hopefully we're going to start, we get those offers right away. We say we're going to review all offers at 5% up, 5 p.m. on Monday. Kind of leaves the psychology with buyers agents that, hey, they're expecting to get a lot of offers this weekend and they're priced accordingly. So maybe we want to move fast. So you create that urgency and competition. We review with the offers Thursday. Ideally, we're under contract and we're all ready to go. Friday to Sunday, the inspection's scheduled. Inspections are usually 7 to 10 days after the contract date, so that gives you time for it. But uh, as an example, my multi-channel marketing includes all of these things. It's a blitz. We put it on MLS. MLS syndicates to Zillow, Realtor, Redfins. I put it all over social media everywhere I possibly can. I give you the ammunition to put it on your social media and push it out to your people, your emails, all the things. Well, I'll email my entire database, let them know I have a new listing, everything's coming out, and then I'll reach out to in our brokerage alone. We have 153 agents that I let them know about this new listing. So they're well aware and they have buyers, and hopefully this meets their buyers' needs. Do video walkthroughs on YouTube, which maybe you've seen those. I've sort of done a lot of those and got a good following, which has been great. And then I mean, the money's in there's an analogy. Anyway, neighborhood targeting. So I will direct mail, I'll door knock, I'll walk up and down your street, talk to all your neighbors because a lot of times they know somebody who may be looking and they may think, huh, I wouldn't mind having that person as my neighbor. So one thing a good number of realtors don't do is this piece is put in the sweat equity and make sure that everybody in the neighborhood knows that this house is going on the market and it's going to be an open house at Sunday at 1 o'clock and all the things we invite them to through. We just do a number of things to make it as big of a deal as possible, and that's why we drive the multiple opportunity. Maximum visibility, strategic urgency gets that top dollar sale. 1 second, excuse me. So there are two hurdles in any purchase, home purchase, the inspection and the appraisal. The first of which, the home inspection, as I mentioned previously, typically between 7 and 10 business days is the window to have that done. If you're writing a competitive offer, you might shorten that into more like 5 days to make your offer more appealing. But ultimately, you wouldn't buy a car without getting it looked at. So you want to make sure you have an inspection done. Um, on the buy side, this is more on the home inspection on your listing. So I apologize. I spoke a little bit out of turn. But they're going to come in with their buyer or their inspector and look at your home. So we'll be strategic. We know ahead of time all the things inspectors look for. Change out your furnace filter. Make sure there's no leaky pipes. All those things. We know those things so we can get ready for ahead of time. But anticipate the likely issues based on your home. Think through if this comes up, here's how we'll handle it scenarios if credits are needed. Obviously, fix the issues that are critical and then credit minor issues if they come up. So more or less, let's be prepared for that because we know it's going to happen and be prepared so that we can be swift when it does come through and we get it done more quickly and without a huge issue. Now, if the house is priced accordingly, due to the market, appraisals shouldn't be an issue, but your lender or the buyer's lender rather will confirm the home value. Just make sure that it supports the loan. You can provide comp packages to highlight improvements and upgrades. but more or less it shouldn't be an issue. It's not an issue most often, but something to think about ahead of time is if the bank doesn't see the same value in your home as you do, or as the price of the home is. So there's an example here. If the sale price is 340, you have a mortgage of 195, there's closing costs 12,000. Your equity check, well, that should be 133, and that's important if you're thinking about what that looks like from a buying a home perspective or the 20% down perspective, which we'll get into here soon. So there's a strategic playbook, as mentioned previously. Prep smartly. Everything needs to be clean, neutral, and functional as best you can. We want to make sure we're pricing strategically. We're certainly going to market aggressively. That's my job. I get all over that. We create urgency through all those activities. We get ready to navigate hurdles by being prepared and being strategic about them. And then ideally, we can close in that 30 to 45 day window. So that's after the contracts are signed. Usually, it's a 30 to 45 day window. If the buyers have an issue, with that time frame or the lenders need longer, we give a longer perspective. But if it's not, 30 days is a good window to get everything cleaned out and get ready to go. Um, so this would be a perspective where in 10 to 14 days we got a contract, 40 to 45 days we're closing, and you have a good amount of equity in that home if your house was the same as the example, which we know it's not. But as it says here, now that you've got a pending sale and equity secured, you can move forward with the next step of buying things. So it does say buying your next home is harder than selling. And I think ultimately because it's your 10 to 15 year future home, right? It's hard to put everything you're looking for into perspective. And that's why in the example I mentioned previously, it took my buyers the better part of 5 to 6 months to find their home because they knew exactly what they're looking for and they weren't finding it initially. And then ultimately they found it a little bit outside the area that they wanted to, but within the school district they wanted to be in. And it just, when they found it, they knew they had to move fast. And so they were prepared on the sell side to get everything done um, as quickly as we could. We put it on the market and it sold in 2 days, which was fantastic. It doesn't happen all the time, but it was a good perspective for them. They got in and were able to move out, close, and move in and close on the same day. They closed on both houses in the same day and they moved one time, which is perfect perspective, right? And they were able to use the equity that they had from the one, put it on the second, all the things. So um, but from this perspective, high demand, if you are focusing in the suburbs where there isn't maybe as much inventory, it does make it harder to find the home you're looking for. Um, Limited supply for perspective and then quick competition. Great homes do get multiple offers quickly, so we have to be ready to move. And we'll get into that more detail here soon as to what that looks like. But in order for us to, if you go tour a home and you love it right on offer that same day, we have to be ready for that. So the reality is you probably will see 15 to 20 homes before finding the one. And when you do find it, you need to act, as I mentioned, really quickly, often, most times. However, I can get a feeling from the agent if offers are expected or activity's high, and that can give us some understanding of how fast we need to move. But again, if it is your 10 to 15 year home, patience and decisiveness does equal success, and it is important. So you do need a pre-approval. That's where you talk to a lender and you give them pay stubs, you give them tax statements, you give them, excuse me, being not political, them, not them, all the things they need to get a good perspective on you. It's not going online and filling out a form on Zillow and Zillow saying you're qualified for X. It's actually going through the motions of getting everything ready to go and having a lender give you a pre-approval letter that you're good to go for this dollar amount and that'll go a long way from a negotiation perspective or from an offer perspective. There are some circumstances where I've heard that it does benefit you to get two of those with two lenders, two approval letters. Um, Usually that's in a market that's much more competitive than ours right now, and that's not to say ours isn't, but usually two offers isn't necessary right now, but it could be something we discuss depending upon circumstance. Um, but you have clear priorities. So if you have a list of 10 things you want, all the boxes you want to check, realizing that probably going to be hard to get all 10 in a quick moving scenario. So what are the 5 to 6 must-haves? Do you have to have a 3-car garage? Is it necessary? But is it a must have? Does it have to happen? Do you have to have a walkout? Things of that nature. Just understanding what those look like. And hopefully you'll have expert guidance if you're working with me. I hope that's my perspective. If you're working with another realtor, hopefully they'll give you excellent expert guidance as well. But speed is the key here. So, as I mentioned previously, a pre-qualified is not a pre-approval. Those are two separate things. They mean generally the same thing, but one just assumes if you say you make $400,000, it just assumes you do. The other is going to check and verify that you make 400,000, which isn't likely. Whatever dollar amount it is you make, they do verify it by looking at pay stubs, tax returns, history of payments, all of those things are important. Obviously, credit rating, but they will also give you a formal approval letter, which we'll have ready to go whenever we want to make an offer, and we include it in our offer that you're approved for the dollar amount that we're putting in the offer. It shows sellers that you're serious. It gives you confidence that not only do you know that you can be approved for, let's go back to the example of 340,000, but you know what that payment looks like monthly, including your PITI, your property insurance and taxes. You know that that payment for 340 is whatever the payment is, and you're comfortable with that from a payment perspective with all your other obligations, and you can support that financially. So it gives you that confidence. And it does speed up the process because if we're touring homes, we say we really like this, and it's a Saturday, the banks are closed. There are some mortgage lenders who will do those things on a Saturday or Sunday, but ultimately, it's hard for you to get that done. Speed in a speed quickly perspective, if I could speak, because it is a Saturday. So having it ready to go in case you find that home on a Saturday is important, and it does, as I mentioned, negotiate or strengthen your negotiation perspective. So it does say here, pay stubs, bank statements, credit reports, tax returns. It is important to get that started ahead of time just because you don't know what the things that lenders might ask you are, the questions they might ask you, and how long those might take. A pre-approval usually lasts between 90 to 120 days before it has to get done again. And when I say done again, meaning they go do a hard pull on your credit, and that does reflect on your credit. But ideally, we'll have enough time to get things going if we get you approved 1 to 2 weeks before we get going. And as I mentioned previously, your non-negotiables, you got to figure these out before we start going. Ideally, before we start going, meaning looking at homes, I already have you set up on a property alert, which is an email that you'll get daily. It can be it can be as sort of real time. But ideally, it gives you a perspective of here are the 5 to 6 things we know we need in a home. Let's start looking before we're actually looking virtually, meaning I send you an email every day that shows you all of the homes that meet your 5 to 6 must-haves in the area. That list will be updated anytime a new listing comes to market or a price change on the current listing that's on market. And so you have a good understanding of what's out there. You can look at them from an image perspective virtually. So you have a good feel so that when we start looking, we can move more quickly because you've already said, you know what, I thought I wanted to live here, but looking at the homes in the market, I don't think so. I'd probably more want to focus over here. And actually, I thought I liked, a ranch, but maybe a two-story makes more sense or vice versa. So you go through a lot of that on the property alert, and it gives you an opportunity for you and I to have good conversations or you and your realtor to have good conversations ahead of time to fine-tune what you're looking for. So that's important. As it says here, if you have 15 must-haves, you really need to narrow it down to 5 or 6 and just realize that everything else is negotiable. Because it's unlikely if you have 15 must-haves, you're going to find all of them. Just bearer of bad news, that's the truth, but it does happen, but it can oftentimes take longer. And in this scenario, we're trying to do things pretty quickly to meet your need because you also just sold your other house. So that perspective. So competitive offer strategy, there are 4 components. Price, terms, and financing are the big ones. As I mentioned, well, that was on the sales side, excuse me. You want to offer at or slightly above list for desirable homes. So if a home is out there listed at 340, maybe it makes sense to offer 1% higher to try to make your offer more competitive. Maybe it makes sense to have larger earnest money as far as terms and flexible closing dates and all those things. The pre-approval from a reputable lender is important. I don't know that it matters too much to somebody selling their home that you're putting 20% down, but that's a component that just shows financial strength and that you're in a strong position. So that's something that we could put in there. Ultimately, though, if I'm writing an offer on a home, I'm calling the agent ahead of time and I'm trying to figure out what are all the things that are really important to that seller. Do they have to be out by a certain day? Do they have to, figure out, all the things that they want to have in the house and just have a good understanding and a good conversation with that listing agent ahead of time so that we can write a very competitive offer that meets all of their terms. If they're concerned about the inspection window, maybe we consider waiving an inspection. I don't recommend that. Excuse me, I don't recommend that because you never know what's going on in the house, but just having that conversation is very, very important ahead of time, just to glean all the information that we can get so we can make our offer more competitive. Example here for a winning offer. So if it were a $530,000 home in Johnston in this scenario, earnest money, if you put 3% down, that's a strong position that's saying, I'm gonna at contract closing. So once the contract's written within usually 3 to 5 business days, I'm gonna give $15,000 in earnest money, and that sits between the parties during the term of the transaction, and then at closing, the money's applied on your end at closing. But it does come out of pocket right away. So figuring out how much money is available from that perspective is important. But a strong position is 3%, can be as low as 1%. But usually the more you put down, the more of a strong position you're providing to the seller. If you're going to put 20% down, the example here's 106,000, which would be great if you have all the equity from your home that you can apply to that. You certainly want to have an inspection done. You can put an appraisal gap. You can put in the contract in writing saying, if the appraisal comes back, I'll cover $10,000. Say it's really low, or really high, or just is off. If there's a difference there, you'll say, I'll cover it. So that way the seller realizes they're not going to have to. And it just sweetens the pot a little bit. And then, like I mentioned here, have flexible closing. So whatever the seller needs, you want to try to accommodate. But also, we have to think about the fact that you're selling your house. And it would be great to have those line up and try to get that done. And usually, with good communication with the listing agent, um, that can get done. So there are circumstances, obviously, where it doesn't, but ideally we can get that done. And so in this example, why you win, because your offer is strong, you have a personal connection, you know your financial strength, and it gives your seller confidence. You want to avoid reckless overpaying. You're only 1% over list, not 10%. You don't want to get crazy because the larger your offer, the less likely it will appraise, if that makes sense. So don't want to get too crazy with it. Um, how to buy before you sell. There are three things listed here. There are options. So if you're in a scenario where you aren't as lucky, I guess, for lack of a better word, as my client was, who was able to move out and move in the same day. There are options. You can do a pending sale contingency. So the how here is your home is already under contract when you make an offer. It does make your offer stronger if you say, Mr. Seller, Mr. and Mrs. Seller, I'm writing an offer in your home, but I still have to sell mine. It's not as strong an offer as somebody who doesn't have that contingency, can move in without issue. It doesn't have to delay closing, waiting on selling a home. So it puts you in a different position. But the pros here, as I mentioned, the cons, it's still contingent. It's best for move-up buyers. It is important to go down that route. But if you can't, strategy two is you sell first with a rent back. So here you sell your home first, you negotiate a 30 to 60-day rent back, and then buy non-contingent. Um, it does give you financial certainty. It does give you strong buying position. The cons is you need to have a buyer willing to rent back, meaning that the buyer takes ownership of your home but rents it to you for 30 to 60 days so you can stay in it. It does happen. It can happen. Um, it's not quite as clean as the first offer here for perspective. But obviously, it's best for buyers who want zero risk. And then the bridge loan strategy is probably more common than rent backs at this point. You borrow against your equity to buy before you sell. The pros are it's non-contingent. It doesn't have to be a strongest offer, and there's no timing pressure. You do carrying costs. You need to qualify. There is some risks. It's best for high income buyers comfortable with temporary dual payments. And what lenders will look at with that is obviously how much equity you have that you can use, But from a cash flow perspective, they want to make sure that if you're not able to move into that home for 30 to 60, maybe 90 days, you can support having two mortgage payments. I'm putting my hands up, you can't see it. Two mortgage payments. And if you can cash flow two mortgage payments as well as that bridge loan payment, and all your other cash flow looks positive and it isn't of concern, then a bridge loan does work. But it's something I would recommend we talk to your lender about. And ideally, when you're getting into these situations, when you're talking to your lender is going to give you an A, B, or C perspective. So A is it's clean. You sell and buy traditional. B is, if we do have to have two payments, can it be done from a financial perspective? And C is sometimes not even included, but sometimes lenders include a C option just to give perspective. And of course, that is a lender conversation. They're the ones that know your financial history better than I do, and it's not a pond I want to jump in because that is something that you need to have that conversation with your lender. But they'll give you perspective as to what that looks like, and we'll work hand in hand with that lender, obviously, to do so. But it's important to have that conversation to be ready. Um, so buying competitively, the strategic playbook, as you mentioned, get pre-approved, define your must-haves. We'll search systematically. We'll be searching ahead of time in those property alerts. We'll have that set up for as long as needed for you to feel comfortable with the market and have understanding what you're looking at. But then we need to act decisively. As mentioned in the example with my client that I dealt with, um, they looked for 5 to 6 months before they found their unicorn home. They found it. We wrote an offer on Sunday. It was Father's Day, actually. On Sunday, um, it was accepted we were negotiating back and forth. It was accepted Tuesday morning. By Thursday, we had had pictures taken on their house. It was listed Thursday. It sold in 2 days. Actually, it sold Friday. So it was listed Thursday. It sold Friday. So that was a busy week for them, busy week for me, but it was a fantastic week because we got it all done. But it does mean you have to move strategically and act decisively. And that means if you're going to start the process, we have all the documents signed that we need to have signed. We have all the paperwork done and out of the way. You're working on getting your home ready to go. And we go from that perspective, which is a little different in this scenario because we started talking about selling your home first and then buying. Either way is true. We want to make sure we have everything prepared and strategically done ahead of time so that we can get it done, as they say. So the 90-day blueprint, month one would be preparation and launch, not loss, preparation and launch. You want to have a strategy session. We'll go over the valuation, get your lender pre-approval. Week two, you clean, you do all the things. If it takes longer than a week, we'll figure that out, right? But this is just an example. Week three, we do professional photography, something I take care of and coordinate. And then, week four, in theory, we're listing your home. We're launching the marketing sprint. We're getting going, right? Month two, ideally your home is going under sale within 10 to 14 days. We'll do the inspection. We'll start looking at your next home. We'll make an offer. Week eight, we're under contract on purchase. We're coordinating closing timelines. Week nine, inspections and appraisals on both the transactions. You can read here as much as I can. We'll address issues. We'll do final walkthroughs, and the final walkthroughs are critical. It's the last stage that you have to find out that everything that you agreed upon is the refrigerator that you agreed upon still there. Is the dishwasher and the clothes dryer, all the things that you agreed upon, are they still there? And is the house in the same condition as it was when you toured it? Is there damage that was done by the movers? Did the homeowner rip out something that should have been in there? But so it's ultimately important to do that final walkthrough, and then we close and you move in, and everything's hunky dory and we're happy. Um, so financial coordination on this, in theory, in this example, your sale closes and day 85, your equity check hits your account. Then we close on the other house on day 92 in this example. You wire 118,000 to your new lender or your second mortgage if it's the same lender. It covers everything, and you have remaining equity of $15,000 for moving costs, immediate improvements, and all the things, assuming this is all the truth and you have the same price point as this house and all those things are there. But my role, I coordinate it all. I make sure that we're on track and everything's smooth and hunky-dory, working with the other agent, the inspectors, the lenders, everything. So that's where I have most of the heavy lifting, but that's we work together from that perspective. So what can go wrong? I know that's a concern, and it's a valid concern. There are a handful of things that can go wrong, but if we're strategic and intentional, we will have talked through these to get a good understanding, and we covered some of them already tonight. But if buyers' financing falls through, we can we can keep other backup offers on track. So say we get two offers initially, we pick one, we say to the other agent, hey, we'll keep yours as a backup offer. If things fall through, we'll come back to you. They may or may not be there at that point, but it's an option. Um, we the option here, inspection issues on your sale, be prepared for that. Sometimes they'll want to put radon mitigation, and if you didn't, then you need to figure out what that looks like and how comfortable you are, and just thinking through and being strategic about it. If there's a low appraisal, we talked about that. You can't find your next home in time. We can try to negotiate a longer period of time. So maybe closing is in 30 to 45 days, maybe it's 60 to 90, depending upon how quickly your buyer's looking to move in. Most times they want to get moved in pretty quickly, but working with them to make sure that's intentional and strategic is important. And then if the closing dates don't align perfectly, we've just figured out what that looks like. Talk to all sides included and try to come to the best terms. And a lot of times, having good communication with all parties is important. And I do that on the front end just to make sure that if we get there, we're all working together. Um, and then major issues. And it does say problems are inevitable in complex transactions, but experienced communication and creative problem solving, we will navigate it all. So, why choose a move up specialist? And that's what I'm calling myself. That's why, because I focus on move up home buyers and sellers. I'm calling myself the specialist from that perspective. But I think ultimately it does come down to the exclusive focus. I'm focused on your situation, and I've gone through it several times, and I know it pretty well. And so I focus on that, and I know the area well enough. I have good relationships with a lot of other parties, which make that important. And my marketing background is huge from a marketing your home perspective. There are some things we can do differently than the average realtor that we can do to get your home moved quickly. Um, if you're moving to Johnston, this is important. That I'm a community insider. I'm involved in community, and that's a good thing. I do have a lot of project management experience, so figuring out all the different moving pieces and making it strategic and intentional is kind of what I've done for a long time, and so I'm good at it. And I use data. Ultimately, my job is to give you all the information possible, and give you all the data possible so you can make your decisions. I just help lead you there and be your assistant and specialist in this perspective. I do have good ratings. Um, and it does say you're not one of my 40 clients juggling different properties. Because there's so much that goes on involved in this, I have to focus and not take as many clients, um, because there's a lot that goes into it. I wouldn't want to let you down in the perspective. So if you're ready to start, here's what would happen next. It makes sense for us to schedule a time to talk further. We went through a lot, but it was generic in the sense it wasn't your specific house and your circumstance. So let's sit down and talk. I'll give you after this your free move up resources. All my contact information is there. If you want to take that journey with me, I would be honored and I would love the opportunity. Um, and there is a guarantee here. I will get you, what does it say? I want to have you, want you to have the knowledge and strategy and move up successfully. If I can make that happen, I'd be honored. If you're not working with me and working with another realtor and you have questions, I'm still here. I want to be a resource and work with you as best I can and like I said, a resource for you. So here I am, that picture, and there's me, and a couple other things down here at the end. It's just per perspective. But let's go into questions. I can see in the chat there are a handful of them. Let's go into detail. And I think Heather's got one initially. Um, and I've got the chat down here, which is why my eyes drop. But what if, what if, what if we can't find a home we like before our sale closes? I covered that a little bit in the outline here, but it's honestly the first question I get when I'm talking to people about this perspective because it does drive anxiety. It does it's a valid, honest question, and so it's certainly a great one. Um, But I think ultimately, like I mentioned in the slide deck, several slides back, there are rent back options. You can extend closings. You can find temporary housing if we need to. We do keep abreast of places where you could rent for a short period of time if you need to. It's not an option most want to consider, but if we have to, there are options. We can get you there. It's ultimately a matter of let's be intentional, strategic ahead of time, talk through all those things and have a game plan so that we're ready if that comes up, which hopefully it won't, but we'll be ready. Um, Sally said, how much equity do I actually need to move up? Well, every circumstance is different. I don't know how long you've been in your home, Sally. I don't know how much you've been paying all your equity, but usually, if you're wanting to apply 20% down on your next home to avoid the PMI insurance and put you in the strongest position, you'd want to have enough equity to cover that, plus all the costs that go into it. So more than 20% would be an ideal perspective, but it doesn't have to be. If you don't want to put 20% down, you want to put 15% down, that's still a strong position, and it does put you in could get you the home and it could be a good thing. So really, I'd say, Sally, let's have that conversation offline and figure out what you're looking at, and um, we'll figure that out for sure. Um, Tom has said, should we wait for interest rates to come down before moving? I do get asked that question all the time, and because people still think 2.5% and 3% is going to be a thing, but they aren't. We're not going to see 2.5% and 3% in our lifetime. I don't think. I think for that to happen, it would have to be something huge going on, like a pandemic. And so the fact that current lenders are offering 5.5% right now, those are historically low interest rates outside the outlier, which is the 2.5% and 3% window. So local lenders are offering 5.5% right now. I saw recently a local credit union had a 5.65 just today. So I would ask Tom, how low do you need to get before you move? And what does that mean in the grander scheme from a financial perspective? And honestly, Tom, if you want to go down that route, I'd love to have that conversation because I think interest rates probably aren't going to get much lower. By all means, you know, we could still drop down into the low fives, but I don't know for sure. Something we'll have to consider and keep an eye on. But Tom, let's talk offline as well if you want to. I'd love to I'd love to further that conversation. Um, Shannon asks, what if our home doesn't appraise when we're selling it? We've talked through that, Shannon. There's a couple ways we can go through that ahead of time, be strategic. But ultimately, if we're not getting too crazy out of line with pricing and the comps in the area, there are homes like yours that have sold for what we're looking at from a list price perspective, because appraisers will look at recent sales. That's one of the main things they look at. I don't think we'll be in an issue. I don't think we'll have an issue with appraisals. But having a plan of action ahead of time to go through that is certainly something we should consider and talk through if we're being intentional and strategic. But I don't know that we'll have an issue with it, to be honest. Sarah says, what if we get outbid on every house we try to buy? I know that's a real concern and thought, Sarah, and it could happen. Um, but I don't know that it will. I've not been in a situation where, you've offered on three or four houses and lost every one of them. I just And most of the reason why that doesn't happen, or I haven't seen it happen, is because I'm very, as I mentioned earlier, communicative. I call up that agent and I have as much of an in-depth conversation as they're willing to have. Some agents don't want to have, the human conversation because they know we're going to negotiate and go to battle. But ultimately, I want to have that human conversation ahead of time so I can understand the motivations of the seller and we can make the strongest offer possible. So I will work to make that not a thing. Um, but sometimes it does come up, and so we'll figure it out and work around it, which I know maybe it isn't the best answer for you, Sarah, but there we are. Um, and then Susie said, "What if should we do any major renovations before selling?" You know, as I mentioned in the slide deck earlier, if it's more than $5,000 or takes longer than 2 weeks, you're not going to get the value out of it. I don't recommend doing any major renovations before you sell. Now, if you want to do your kitchen and sell in a year or a year and a half from now, and so you can enjoy that kitchen, that's a different perspective. But if you're looking to sell, keep it under 5,000, keep it within 2 weeks so we can get going. But not everyone's wanting to get going right away, but just a perspective to consider. Any other questions that we can add into the chat? Okay. Well, I will actually one side. All my contact information is right there. I know you can't click on the calendar link because it's a slide deck and you can't click on it, but reach out to me, my email, my phone number. You can text me, call me. I can get you the Calendly link if you want to set that up ultimately. And if there's more questions that you don't want to answer in public with other people, I get it. We can have those conversations offline. Um, Ultimately, I thank you for coming tonight. It's been fun. And I hopefully answered all the questions. It's a lot that goes into it. So if you're thinking about doing this, I suggest you do talk to a realtor that does this more often than not and is maybe not a specialist, but somebody who's done it before, and have that conversation. I'd love to have that opportunity with you. So if you do want to reach out, I'd love to have that conversation. If not, I certainly wish you well. I do want to be a resource. If you do have questions, let me know. I appreciate it. Thank you.